For over a century, South Africa's power grid has operated on this single, unshakable rule. Basically, everything routes through Eskom.
Right.
But that absolute monopoly is finally coming to an end. So, welcome to this professional briefing by Enerthia Energy. And before we get into how this shift changes, well, pretty much everything for large power users, a quick note on who is bringing you this analysis.
Yeah, that's important context.
Exactly. Enerthia Energy works across 4 connected offerings. That's energy consultancy, business development, product and service endorsement, and funding origination. And just to be absolutely clear up front, Enerthia originates and structures funding. They do not fund from their own balance sheet.
Right, and they are not an EPC, an engineering, procurement, and construction contractor.
Yeah, setting those boundaries is super important. So we are looking at the arrival of the South African wholesale electricity market, or SAWEM.
Which is a massive deal. I mean, this is the transition to a competitive market where generators, traders, and large industrial customers can finally buy and sell power directly among themselves.
Which sounds amazing on paper, right?
Right.
Moving from a monopoly to a free market.
Yeah.
But the reality of actually building that regulatory infrastructure is it's proving incredibly difficult.
Oh, without a doubt.
We've already seen the national transmission company South Africa, the NTCSA, push their initial April 2026 launch target.
Yeah, they pushed it to the third quarter of 2026.
Right. And even that third quarter target is shifting now.
Because the sheer scale of the work is just becoming apparent. Recently, Dominic Goncalves of Cresco Project Finance noted that Phase 1 is now realistically looking like April 2027.
Wow, a whole year later.
Yeah. And the delay isn't just, bureaucratic red tape. It's really about the mechanics of the market plumbing.
The underlying systems.
Exactly.
Right.
You have the market code that was submitted back in February 2026, plus the regulator is tracking 7 parallel reform projects.
7.
Yeah, including these massive trading rules targeted for finalization by the end of September 2026.
It makes complete sense when you think about those mechanics. It's like building this in public is like changing a train's engine while it is actively rolling down the tracks.
He really is.
Because you're moving from a set menu where everyone just eats whatever the chef cooks to an active stock trading floor where millions of people are screaming out bids for specific ingredients by the minute.
That stock floor analogy captures it perfectly, I think, because it changes the fundamental maths for large power users. Today, a corporate buyer holds one flat contract with a single counterparty.
It's unpredictable.
Exactly. But under SAWEM, electricity stops being just a flat service and it becomes this traded, highly time-sensitive commodity.
Wait, so if I'm a developer, I can't just, build a solar farm in a province where land is cheap and assume I'll easily sell the power.
Not anymore.
I actually have to factor in how and when that power reaches the buyer before I even break ground.
You've hit the core of the issue right there. Goncalves pointed out this major shift happening right now. Demand is moving away from just finding the absolute cheapest renewable energy.
Okay, so what do they want instead?
Buyers want firmed, dispatchable energy, meaning power that can be turned on exactly when demand spikes, rather than just whenever the wind happens to blow or the sun happens to shine.
Ah, I see. Which means transmission rights and your physical location on the grid suddenly become, well, just as valuable as the generating asset itself.
Precisely. If you cannot deliver the power when the price is highest, your cheap solar farm just isn't worth much.
Right. And that reality forces a total redesign in how projects are built and financed, doesn't it? Like, banks can no longer just underwrite one flat contract.
No, they have to evaluate a really complex portfolio of contracted and market revenues. And for corporate buyers, it opens the door to buying energy that actually matches their specific hour-by-hour load shape.
But how do you actually manage that in practice?
Yeah.
Because it sounds like a logistical nightmare for a single factory or a mine to balance its fluctuating power needs against a live wholesale market.
Well, the emerging solution is aggregation.
Okay.
Traders are stepping in to pool different generation assets, so say mixing wind and solar with large-scale battery storage across various regions.
Oh, got it. So if one region has severe grid congestion and faces curtailment risk.
Meaning the grid is too full.
Yeah, and it literally forces a solar plant to stop sending power. The trader can just lean on a battery or a wind farm in a completely different province to keep supplying their clients.
That is the mechanism behind it, yeah. It manages risk and enables shorter, much more flexible contracts.
That makes a lot of sense.
And this early aggregation is going to be crucial because this market, well, it will not arrive fully mature. Liquidity, price discovery, which is the ability to actually figure out what the power is worth at any given second. And the settlement systems, they're going to take years to perfect. So engaging in aggregation and completing the market operator's training program is really the only way to ensure readiness.
So the real critical takeaway for you, the listener buying power at scale, is that preparation has to happen right now, long before the market actually opens.
Absolutely.
Knowing your specific load shape, your grid position, and your appetite for price exposure will determine if SAWEM is a massive financial opportunity or a severe repricing risk for your operations.
You simply cannot wait for launch day to figure out your strategy. By then, the market will have already priced in all the risks.
Very true. To read the full, detailed written briefing on this transition, please make sure to visit the Enerthia Energy website.
And as you map out your corporate strategy, consider this. Once electricity becomes a hyper-local, time-sensitive commodity, will we start seeing entirely new, power-hungry industries pop up in specific South African towns solely because that is where the grid happens to be cheapest at 2 p.m. on a Tuesday?